and welcome to Business Arena on TVP World. I'm your host, Marie Cato. Join me for the latest business headlines of the day. If everything goes according to plan, Poland will experience a torrent of EU-funded investment projects next year. Economists expect this to give the Polish economy a substantial boost in 2025. The windfall has two sources. One is regular cohesion funds, which Poland receives every year and has used, for instance, to finance the construction of its express network. The other is the Recovery and Resilience Facility, the special post-pandemic pot of money financed by common European debt. These two sources together will amount to almost 30 billion euros in EU-funded investment in a historic one-off. The government and economists expect that this torrent of cash will become a substantial jolt for investment in the country, which has been somewhat lacking since the end of the pandemic in Poland. Unlike some of its neighbors, Poland is heading into 2025 with a good deal of optimism. Some have revised their projections downward slightly, but growth is still expected to accelerate next year, and a win in the battle against inflation may finally appear on the horizon.
What's the economic outlook for Poland in 2025? Well, some are more optimistic than others.
This year alone, we expect growth to reach around 3% of GDP, whereas next year, indeed, the projections are closer to 4%.
Many economists, however, are not as optimistic as Poland's Ministry of Finance. According to a Bloomberg survey, the average forecast for growth in the year 2025 is 3.4%. That's still not bad compared to the rest of Europe. Among countries within the OECD, only Ireland is expected to outperform Poland in terms of growth next year. Now, what lies behind this positive outlook? Well, aside from a very healthy internal demand, which is expected to strengthen in 2025, the star of next year will most certainly be investment, and a lot of it.
We have already dedicated massive investments in the national budget. We will have massive investments from the EU funds. And obviously, we are working on improving the business environment.
The uptake of EU funds alone is expected to more than double next year. Add to this, the investments already slotted into the Polish budget for 2025, as well as an increase in interest from the private sector. Average forecasts point to investment growth of more than 7% year-on-year in 2025. Compared to this year's very sluggish 1.5 to 2%.
We still think that the private consumption growth will be positive, that investment will accelerate.
Poland will continue to struggle with inflation, however. It may still climb to 6% at the start of the year, and it looks like it won't come down until late Q2, early Q3 2025. Also standing in Poland's way is weak performance of Europe's largest economies, which will continue to drag on exports. This may be further exacerbated by U.S. tariffs, which Donald Trump is threatening to impose.
We already have foreseen a discussion about it at the EU finance ministers in January. Minister Domański will chair a dinner of EU finance ministers on the 20th of January when Donald Trump takes office, so it's very timely.
All in all, despite continued geopolitical turmoil in the region and around the globe, Poland enters 2025 with a good deal of hope.
And perhaps unsurprisingly, today's episode of The Bottom Line catches us on the cusp of 2024 and 2025. We'll take a look at what to expect for the Polish economy in the coming year, but also what the economy's priorities should be. As New Year's Eve celebrations kick off today, many Poles will be raising a glass to welcome 2025. And it seems sparkling wines will be the drink of choice, as new data shows their sales have skyrocketed in recent months. According to a report by Nielsen IQ, sales of sparkling wines in Poland have surged sevenfold compared to previous years. While traditionally associated with New Year's Eve toasts, these beverages are increasingly popular year-round, reflecting shifting consumer preferences. One notable trend within this segment is the growing popularity of non-alcoholic sparkling wines, which now account for 5.7% of the total market value. Analysts highlight that this shift reflects changing tastes and a focus on more health-conscious choices among consumers. Retailers have reported that Prosecco and Cava remain favorites, but local producers are also gaining traction, offering competitively priced alternatives. The region's e-commerce market is booming, putting Central and Eastern Europe in fourth place globally for online retail growth. Local companies are riding the trend, and the owner of fashion brands like Sinsay and Reserved plans to supercharge both physically expansion and online sales in the coming year.
According to the Quo Vadis e-commerce report by Cushman & Wakefield, across CEE, retail markets are already highly developed, with Poland alone accounting for more than half of the region's e-commerce turnover. It didn't go unnoticed by LPP, Poland's largest fashion retailer. That is why the company plans to invest more than 200 million euros in improving logistics, which underpins the sales channel.
Our advantage primarily comes from faster order fulfillment, usually 2 days instead of several weeks, better insight into local trends and customer needs, and a large network of stores that reinforces our brands, which translates into online sales as well.
Since 2019, LPP's online sales have quadrupled to over 900 million euro. In the last quarter, e-commerce in this group accounted for 27% of revenues, more than 3 percentage points higher than the year before. Other retailers have experienced similar growth, but at the same time, LPP has been developing its network of physical locations, adding 2,000 just last year. The company says that each new store effectively draws more customers into LPP's 5 dedicated shopping apps. So far, 12 million downloads have been logged, but the company believes this number will increase substantially. LPP's ability to achieve margins online that match those of physical retail is no small feat, particularly in a market facing headwinds from fast-growing Chinese platforms and the planned merger of About You with Zalando. In the current fiscal year, the group aims for total sales exceeding 4.4 billion euro and around 5.7 billion euro next year.
And that's all for our business news updates today. For more business stories, check out tvpworld.com.